morning or afternoon active duty passive income and people out there in the real estate investing world and real estate buying and selling world. I'm Eric Upchurch, co-founder and chief product officer at Active Duty Passive Income. We have a special guest with us today. Spencer Thomas is the ADPI, Active Duty Passive Income chief financial services officer. He is a guru loan officer. That's just coming from me. He wouldn't call himself that for sure, but I would say he is an expert in this industry. And so we're going to learn today and dispel some VA loan myths. We all know that it is a very highly competitive market. And whether you're watching this after the fact and there's a slump in the market or whatever the market cycle is where you're watching this, it's good to know that the VA loan has a specific superpower or several, and we need to explore those and open up the eyes of people who are using the VA loan product. So we have Spencer Thomas, a VA loan specialist in this industry. He's been doing this for many years. Spencer, just tell us 10 seconds about yourself, and then we'll get right into the questions.
Sure. So Spencer Thomas here. I am also a veteran, served in the Army Reserves for about 6 years myself as a chemical operations specialist. My background is all in finance. I was a private banker for over a decade, a consultant to financial institutions as well for about 4 years prior to coming on with ADPI and building out our mortgage branch, our insurance branch, and the gambit. So honored to be here.
Awesome. Well, thank you for being here. This is going to be brief for those of you watching, but I wanted to just go right into the meat of today. So Spencer, in your opinion, and not even actually in your opinion, according to VA guidelines and lending guidelines, what actually makes the VA loan better than conventional loan offers in today's market?
Sure. So a couple of things. One, the borrowers don't need to put any money down other than covering their closing costs unless the seller covers those. So it means they can qualify for more house, right? Because they don't have to have that 20% or whatever the case may be. Also, the average credit score for a VA loan buyer is higher, right, than those going for FHA or conforming loans. There's also a few other reasons. Appraisals come in usually faster, especially in today's market. They're coming in on average about 5 to 7 business days from when we order them. Conventional FHA, they're coming in within 3 to 4 weeks on average. So in today's market, when speed is a necessity, VA has been outperforming all the other loans. We can also fight the appraisals if they come in low and a whole bunch of other stuff that we can talk about.
So I want to dive into some of that stuff, and I'm going to interrupt you here because you're blasting out a ton of great information here that each one of them could have their own segment in here. So let me dive in a little bit. Why would a VA buyer have a higher credit score? On average, you said 712. Yeah. So why is that?
On average, it's because usually, when you're in the military, if you want to have top secret clearance, you actually have to have good credit. And so those that have any sort of security clearance usually have good credit to go along with it. And there's quite a few jobs in the military that require that, as well as, when you're deployed and you're in the military, right, you're making good money, you're able to pay all your bills on time. Military and, veterans were taught discipline, pay your bills, do what you're supposed to do, and honor your commitments. So for me, that's the biggest reasons why I think soldiers have higher credit scores on average.
Awesome. And I want to interrupt real quick and just say, if you're interested in learning more from Spencer or from our team, you can go into the comments in the description, and activedutypassiveincome.com/connect will put you in contact with in-house ADPI lending team. And we can even hook you up with a real estate agent who understands these principles as well. All right. So in addition to having that higher credit score, tell me, the first thing you mentioned was the fact that you could actually have the seller could actually pay closing costs. So maybe that doesn't work in today's market, but what kind of scenario would you see a seller willing to pay some or all of closing costs? Because I've actually done this where I've come to the closing table with a VA loan with nothing out of pocket. In fact, not even paying the VA loan funding fee. So in what scenario?
In markets where it's more of a buyer's market, where there's more supply than demand, is going to be the easiest one. Also, when houses are maybe not as in an optimal location. Another thing with VA loans, you can buy up to 5 units as long as one of the units is for commercial purposes, and the other 4 are for residential dwelling. So there isn't as much of a demand in the market for multifamily homes as there is for single family. So a lot of my VA buyers that are going after the multifamily, they're getting the seller to come to the table. or a manufactured home that's on a permanently fixed foundation. Those sort of outside of the box type scenarios. Also, with the VA loan, there isn't a limit to the number of acres that are attached to the property as well. Like our conventional, most will cap you at about 15 to 20 acres. VA, they don't care as long as it's not purposed for agricultural use, right? It's all about how it's zoned. But so there's a few ways that you can get the seller, if you look for those outside of the box homes right now in today's market, or multifamily.
So for those of you vets out there looking for a 100-acre ranch in Montana right now, you're going to be good to go, right?
As long as it's not zoned for agricultural use.
Right. We just need peace of mind.
That's right. After you buy it, it can be rezoned, but
sure.
Not prior.
All right. So that's great. Okay. So I want to transition to VA appraisals. You mentioned that earlier a little bit, but I've heard that VA appraisals are super strict and always have issues. Is that true?
That is not true. I have as many problems with the VA appraisals as I do conventional or FHA. The only thing that I'd say is a little bit different from VA appraisals than the most is if there's like stairs going back down the house or in the house anywhere and there isn't railing, they're going to make you put railing. But they don't even care if it's 2x4s that you just nail together, right? As long as there's some sort of railing there, that's the biggest thing that they care about. Other than that, I mean, it's going to be a standard appraisal where they're going to look for signs of, damage. If there's holes in the wall, exposed wiring, plumbing missing, like any appraiser is going to catch that stuff and point it out and usually require it to be fixed. So the VA appraisals actually are better because I actually, as a loan officer, have two different ways to fight them. First off, if it's going to come in low, the appraiser will send an email to the loan officer and saying, hey, I'm issuing Tidewater notice, which means, hey, the appraisal is going to come in right now. It's looking like it's going to come in lower than the purchase price. And so they'll say, hey, send me your best comps, 3. And, some appraisers will be different in what they want. But for the most part, it's, hey, send me your 3 best comps that have sold within the last, 6 months that your agents feel are justifying the value of this property. So at that point, we go to the realtor and say, hey, send me your comps. We send it to the appraiser. A lot of times that solves it right then. And the appraisal comes back within a couple of days at, value, at purchase price. If for some reason it doesn't work and it still comes in below purchase price, we have another tool, and it's called a reconsideration of value. This is where a lot of loan officers, unless you do VA loans a lot, don't even know about it. Because I know I've told them about it. And so what that is it's a written letter from the veteran, signed by the veteran, saying, hey, here's why I believe the property should be worth more, and I believe it should be worth this much. Signed and dated by the veteran, sent directly to the VA Loan Regional Center that covers that state. And on average, prior to this craziness, it only took them about 24 hours to respond. Right now, they're about 5 business days in most areas to respond. And usually if it's within 3 to 5% is all you need of the property value to increase, they'll sign off on it. I've had
so that comes down to the veteran basically saying, I'm willing to pay this. I believe it's worth this as well. And, the real estate agents have been working with the appraiser and all that stuff too, right? So
yeah, and showing
verification from the veteran.
Yeah. And so, it really helps if you can also point out where the appraiser messed, up on the appraisal or missed something. Like this last one that we did in California, the appraiser didn't give them any extra value for the condo being an end unit and having a great view, right? That alone got brought up an extra $15,000.
Wow, that's great. Mm-hmm. Yeah, and that kind of plays into, and someone watching this might be thinking, okay, well, what about inspections? That's the appraisal, but what about inspections? I know that your pest section can be, what is that called? Your section.
Section 1.
I would know that by now. Your Section 1 clearance is something that I've heard people say, oh, well, if it's a VA offer, they're going to require I do work on my house, and I don't want to do that. So VA loans are out. So talk about that for a second.
Sure. So any good borrower or good agent is going to recommend that their borrower does a pest inspection, right, on the property, especially like here in the South or anywhere where there's wood destroying insects. And likewise, the VA expects it, but the VA doesn't care to see the report. All they want is called a Section 1 clearance letter signed by the veteran saying that there's no active signs of wood destroying insects. That's it. There's a Section 2, which is more preventative measures, but that is not needed for VA. It's just Section 1 clearance letter signed saying, hey, no active signs of wood destroying pests or organisms, and you're good to go. From the veteran? Well, it's signed by the veteran, but from the pest company.
Right. Okay. Gotcha. Yeah. So technically those, I was under the impression that all Section 1 damage or repairs or whatever had to be fixed prior to close.
No, if there is physical damage on the property itself that's not pointed out by the appraiser, right? The Section 1 clearance letter will just say there's no active signs of wood destroying insects. If they list repairs that need to be done, then that could be an issue. But I don't ask for an actual inspection report that lists the repairs. All I need is that clear section 1 clearance letter.
Gotcha.
But a termite company won't issue it unless remediation has been done to fix the pests.
Yeah, I've been had on the dry rot on the bottom of a garage door type of thing, like those little things sometimes. All right, so moving on. I appreciate the insight on that. So why wouldn't a veteran, if they have the money to put down on a property, on a primary residence, why wouldn't they just do a conventional loan?
Well, for one, the interest rate is usually about 0.5% better on a 30-year fixed VA loan than it is conventional. Conventional loans right now are anywhere from 3 to 3.25, depending on credit. VAs right now are anywhere from 2.5 to 2.875, depending on credit and the transaction itself. So one, you're going to get a much lower interest rate. Now there is a funding fee, right? So it's 2.3% of the loan amount if it's your first use, 3.6% if it's a subsequent use. Now, if you put at least 5% down, that'll drop it down to 1.65%. If you have a disability rating of at least 10%, the VA funding fee is waived altogether. Right. So there is sometimes we'll recommend maybe putting 5% down, to reduce that funding fee if it's a subsequent use. But for me, cash is king, and I'd rather reserve my cash to take down more investment properties where my cash on cash return is in the double digits.
And that VA loan funding fee can be rolled into the loan, correct?
Exactly. Yep. It doesn't need to be paid out of pocket.
That's fantastic benefit as well. So thanks for that insight. So what types of homes can a veteran buy using their VA loan? I know there are several types, and you hit on a couple a little bit earlier, but if you could run down the gamut. I know there are some pretty strange circumstances that probably nobody listening to this has heard of. So I'd love to hear from you what types of loans you've done and what are actually available out there for veterans and anyone who served.
Sure. So any home that meets the local guidelines to be considered a single family dwelling and that's permanently a fixed foundation that can pass inspections and appraisals, the VA will allow. I mean, really depends on vendor overlays at that point. So for instance, one of the agents here in Atlanta was interested in having us build or finance shipping containers that have been converted into homes. So I called the VA and said, hey, could this work? And they're like, yeah, as long as it's built to code and the state and city recognizes it as a dwelling, they're good on their end. And then it depends on the lender. She said where you may struggle is on the appraisal side, right? How do you appraise those? So that's the main thing is single family dwelling. It could be a condo. It could be a manufactured home that's on a permanent fixed foundation. It could be a cabin on some land. And then you can go all the way up to 5 units as long as one of the units is for commercial purposes. So like, for instance, there's a fourplex and a coffee shop at the bottom, right? Or a restaurant. As long as that commercial unit doesn't exceed 25% of the square footage of the overall property, you're good to go. And so, I mean, if you find properties like that, those are going to cash flow like crazy. So it's a no-brainer if you have a VA entitlement and you can qualify for that. Also, there's no limit to how much you can borrow other than what the lenders may cap you at, and then what your debt to income ratio may cap you.
Did you hear that? I want to stop you right there. So if for anyone, and this is a 2020 change, for anyone who's listening and going, oh, there's a limit there isn't a VA limit. That's what Spencer just said. There may be lending limits based on your debt to income ratio, correct? You still have to qualify for the loan, but as long as you can pay that debt sufficiently according to your lender, there is no limit on what you can qualify. And what types of loans have you seen people qualify for on the VA side? Curious.
Yeah, I've seen one up to $3 million for a triplex up in Pennsylvania.
And that's probably cash flowing, or there's some kind of play on that. That's amazing.
Yeah, each unit was bringing in like $3,500 a month.
Yeah, that's fantastic. So really, everyone, if you're out there listening to this, this far in, and you just really need to, and we teach this all the time, you really have to think about what your options are, get creative with different properties. And if you're looking to, go the military house hacking route, which we teach in our book, make sure that you're connecting with us. Again, active duty passive income /connect. And we will help you kind of work through some of those scenarios. And you can get creative with realtors who are in our network, who are trained to look for those maybe fourplexes with a commercial building on the property that you can qualify for 0 down with the VA loan. It's an amazing loan product, which is why we're in here talking about this today. So what else in general, Spencer, should veterans and sellers know about the VA loan?
Like I said before, I can close really quickly. We're closing on average about 21 days from start to finish. And so, sorry, computer's acting up. So speed to closing is a huge factor. Appraisals, like I said, we can fight them. borrowers are going to have better credit. They're going to qualify for more of a house. If there's any issue with bidding, if it goes up too high, the veterans can choose to pay the difference. If for some reason the appraisal value comes in lower, right, doesn't mean the deal's dead. If the veteran has the cash and wants to come to the table with the difference, that's their right, and the VA will allow them to. And so, for me, if I have an option between, two deals, if I'm the seller and one's a VA and one's a conventional, putting, is conventional, you can put as little as 3% down. It's your first house, but you can pay mortgage insurance and all that. I'm going to choose the VA over conventional as the seller, because I know, one, not only do they serve our country, but two, their credit scores are on average going to be higher, and you have the full backing of the U.S. government on their loan.
Yeah, I mean, you're building a strong case here, and there are additional benefits to the VA loan as well. But the goal here is, especially for sellers and for real estate agents who are representing sellers, to understand that VA loans actually have more benefits than people think to the seller. So as long as they're educated about it, they can get creative and make amazing things happen. And it's a more secure loan. It's a more, all the things that you've been talking about. So that's kind of where we want this to go. We want people to start understanding that don't dispel a VA loan because you think there's no skin in the game. The skin in the game is the service, right? Is the service member's time deploying and all of those things. And it's backed by the government. This is an amazing loan product. All right. So there's additional things that I want to kind of hit on. I've got some bullet points. You've got using rents as a first-time buyer. If you sign up with a property management company, what does that do for your debt to income, or how does that help the veteran?
Sure. So when it comes to using rent to qualify in your debt to income ratio or future rent, right, the VA wants one of two things. One, you have a history of at least a year being a landlord or managing your own real estate or managing somebody else's real estate. Or two, there's an exception, but it's a case by case. We have to email the VA Regional Loan Center each time. But it's where we say, hey, here's a situation where we need to count the future rent because our DTI is going to be too low, debt to income ratio. And so they'll say, all right, as long as the veteran signs a year-long lease or contract with a property management company, not the lease itself, but a property management company. Mm-hmm. So you're going to pay a fee for that out of your rent. They're willing to accept that future rent. But if you have that year of experience, you've owned your own rentals, you've managed somebody else's rentals, you've been a realtor, a loan officer, et cetera, you can prove that year of history, then you can use the future income. So that fourplex I was talking about earlier with the commercial property, you can use all of that projected income, as long as they can verify it through lease agreements, et cetera, towards your debt to income ratio. Because, I mean, how else are you going to qualify for a $3 million loan being an active duty, right? Mm-hmm. It's using that future income that property is going to bring in. And so that's where you can qualify for huge, amazing deals that most people in your market cannot take down. And you're going to be able to negotiate with the seller to cover up to 4% of the purchase price in your closing costs.
And how about basic allowance for housing? BAH,
yeah, your BAH and your BAS. And if you have a disability rating, if you're out of service, we can gross those numbers up by an additional 25% because they're non-tax. Any non-taxable income on a VA loan, we can bump it up an extra 25%.
Awesome. So to reiterate, if you want to get started in this process, go to activedutypassiveincome.com/connect. Connect with our in-house lending team. Spencer's our Chief Financial Services Officer, has been doing this for a long time and crushing it and really helping veterans and active duty service members get started in this process. If you want to know the process of military house hacking, which we wrote a book about, you can get a free download of our best-selling book, Military House Hacking, on our website, activedutypassiveincome.com. We have tons of free resources there. We even teach in our Military Real Estate Investing Academy how to apply some of these principles that we have used personally. We're writing about personal experience, all from active duty and veteran investors, about processes we've actually used and continue to use. So I'd urge you to get to our website, make sure that you are connecting with our team, and start looking around to see what works for you. Spencer, I want to say thank you very much for being on. This is just the beginning of dispelling some rumors and myths about the VA loan. It's actually a better loan product for sellers to take advantage of. Thank you for your time, and we will talk to you